within the range over the last several days. So the question then becomes, what are we starting here? I mean, is this the pause that refreshes to the upside? Is this a higher low that we're establishing? The title of today's session, See at the Bear Market Crossroads, as oil stumbles and the dollar pops. And that's kind of a big thing. You're seeing that in the option activity, very divergent views. Again, I kind of mentioned in the commentary, tie goes to the bond markets. We'll kind of talk through this today, as well as some other symbols out there that are experiencing some activity. So as we look at the S&P, we'll look at the SPY at the moment. And you'll kind of see the cash session as we opened up slightly lower. We rallied and actually closed above yesterday's high. Volume's not really all that significant for an ETF like SPY, but nonetheless, it looks like we may be poised to retest the prior high. As I mentioned last week, June 29th starts the most bullish period of the year for 10 trading days. And, so it's we're kind of running out the clock here, and we're not exactly moving higher. As you look at the 29th, it's right here, but 2.15% average return. Could that get us to, 390? I mean, sure, it's a real possibility. By the end of the week, we could see ourselves at 390. But again, as you look at what's going on, some of the lift in the market, you look at the sectors that perform best today. We had communications, we had cyclicals and technology. Those were some of the worst performing areas last week. Energy and utilities were two of the best performing parts of the market. Now, on the energy story, oil today certainly faltered. It was down nearly 10%. It was down over 10% at one point today. Came off the lows a little bit as we're encroaching upon that 95 level of support. And as you think about this, what is this telling us? Why is oil selling off? Well, the fact of the matter is there are real recessionary pressures right now. I mean, look, the Atlanta Fed's pointing to maybe -2 GDP for this second quarter of the year. I mean, we're basically at the moment, we're stumbling economically. Where do we go from here? Well, again, is the silver lining a recession? Well, as you look at the market, that's what's kind of driving things today. And maybe a little bit of fear of maybe a short squeeze. So, for example, fear leading to a short squeeze. So if we go to a list I have here, it's certainly not every high short interest stock, and it's changed a little bit, but this is not a bad list to monitor. But you look at companies like Agen, for example, Sorrento Therapeutics is continuing to run. A lot of these roadblocks, there was some bullish activity in roadblocks today, finding a higher low, breaking out on some good volume. Look, there's some optimism here, right? The point being is, if we're entering a recession, does this hold the Fed back from raising as much? Well, let's do a quick little synopsis here on the Fed funds rate /ZQ. And look at this sucker. We're basically saying, look, we're going to stall out in November. There's December, there's January, and the Fed's going to start to cut rates beginning early in the year, maybe by April's meeting, and all of a sudden we're at maybe, what is that, 2.5 to 2.75% by November of next year. And look at how this has shifted upward just over the last week. It's really crazy to think about, but is the last rate increase going to be October? We already have it on tap right now for a September that's August. September quarter point increase, half point increase, maybe another quarter point in October, and we're done. Look at this. That's in essence what the market's telling us right now. That's the silver lining to otherwise a very bearish market right now, with GDP failing, earnings. Again, the news right now is the thought that margins are going to experience a lot of compression. If you look at PPI against CPI, certainly that's indicating it. Potentially negative 2% GDP. There's a lot of stuff flashing some major red signs right now. But all that's doing is fueling the hope that the Fed doesn't raise as much. We're going to find the optimum balance of falling energy prices, the Goldilocks scenario, right? The soft landing. Isn't this the exact same thing that was proposed or hyped back in 2008 as well, when oil prices went to like almost 140? Very, very similar scenario. So we have this kind of collision right now of a very bullish period of time right now. we're coming into bank earnings next week, and we're still have a little bit of a relief time to kind of sit back. The Fed's in the background, optimism they're not going to raise rates as much, and without the acknowledgement of earnings being a real drag on things. So there is this little window right now for the market to potentially move higher. And today's close, while today was an outside day compared to Friday's range, the strong close does mean it may be really poised to kind of retest its highs. But you got to put that in perspective. That's a relatively modest move. 2% with this volatile market is not a lot. And so while we're experiencing this short squeeze, and this is not about looking for high short interest stocks, over 5% short interest, approaching 10 or higher, this can create a source of intraday opportunity. Things can change very, very quickly. If you look at the trade flash up here, there's no significant prints to call out. Just there was a couple of news items there. So really watch the market this week. As we go to the VIX, for example, the VIX is moving down. I love this thing to pull back towards 25. And if we do get a little more of a rally, you could see the VIX really get sold and drive it back down to 20. Those looking to reset from a bearish standpoint would love to see the VIX at 20 and the skew starting to rise up here towards 130. Maybe we get that classic scenario and we start to reestablish the bearish order in a rally, which is kind of ironic. As you look at today's movement, for example, you'll see that Facebook, let's make sure I got this, Meta, whatever you want to call it these days, Meta up 5%, Google's up there. Again, there's your communications sector. So again, do we catch a little bit of a bid here? The one that's kind of interesting is that, obviously these are more advertising focused, but someone that's very, very impacted by virtue of high oil prices that could get some relief. Maybe consumers step up and consume more, probably not, but at least on the cost side of it, could create ease some pressures if oil does drop here. That is Amazon. And Amazon is a stock today that, had a little bit of bullish activity to the upside. But again, this is one that if the market rallies, you'd probably expect Amazon to participate in that rally. And maybe we might get back to prior highs up there at about 125, which is about the 1/3 retracement of the down move. You'd also notice Netflix today. Now, Netflix has been a stock that's down greatly. It has earnings coming up here on the 19th. Do we stage a little bit of a rally going into the earnings? Obviously, if you saw the report on the millions of hours, people watching Stranger Things 4, did that provide a little bit of a boost in this quarter? Possibly. Obviously, the stock hasn't really gone up and responded to it. But there's a trade today in Netflix. It's for a 22 July expiration. Wasn't exactly massive, but it's interesting. Buying the 200 and selling the 205. It's about 5,500 contracts. It's filled in one print. So if you come down here, you look at the time and sales. I think I can. Maybe someday. I probably have to clear up my filters. There we go. You'll notice we're buying the 200, selling the 205. And you look at the 22 July expiration, you'll see that, again, that's greater than the open interest. Well, I guess not. It could be rolling down from the 205 to the 200 as well. Either scenario, it doesn't really matter. The idea is that we're looking for bullish interest at 200. And if you look back at prior highs in here, 200 is not much higher than we're currently trading. So potentially a little bit of near-term push, maybe get a pre-earnings rally in Netflix. Is that on the back of Stranger Things? I guess there's been Stranger Things out there that we've seen in the last number of months here. But circling back to oil, one of the things with oil is that it's down today. Again, the idea is generally just recessionary pressures. But then you hear about Saudi Arabia, and all of a sudden they're selling oil at near the all-time high price to Asia. And you look at the product depth here for forward/CL, and you see this backwardation that oil is in right now. Sorry for the delay, my system. But anyway, look at the slope of the line here as we go out. This is going back in time, right? Over the last number of weeks here. We're basically steeper today than we were in June, for example. The situation in terms of supply and the potential shortage in the near future has not materially changed. And so again, you hear prices out of Saudi Arabia being relatively high. Well, What was some of the pressure today in oil? Well, if we look at the dollar, certainly the dollar was indicating a lot of strength today as we kind of broke out to new high, largely in the back of the issues with Europe as the euro US dollar broke support. So, dollar strengthening vis-a-vis the euro, which may help strengthen our treasury market. But if we look at gold, for example, let's just use GLD as a proxy. Gold dropping. We kind of talked about this bearishness, and last week in my session, I talked about some bearish activity going to the end of last week in GLD specifically, and the potential for a stronger dollar and a stronger bond market shifting towards defense as bonds attract the dollar, pressuring gold. You'll see yields were down today, and this is the canary in the coal mine. So again, tie goes the bonds. As we look at this thing and we're saying, look, there's some bullish activity in high short interest stocks. We experienced a nice little short squeeze today. Bullish activity in Netflix, and I got a couple other stocks we'll look at here in a second. But all of a sudden, but look at the 10-year. It's falling. We're down 0.8 today. What about TYX? Well, let's look at the 30-year Treasury. That's the 10, down 0.84. What about FVX? FVX down 0.69. What do we see here? The 5, the 10, and 30 are actually getting closer together. Right now, we're in a basically flat to inverted yield curve, 2s and 5s inverted today. I mean, we're in a very dire situation in terms of the bond market, that the rise in yields was all about the Fed raising rates. And now the fall in yields is all about the Fed potentially stopping at a lower terminal rate, maybe 2.5%, maybe 2%. How far can they get before the market really stumbles? And this goes back to a theme I set the stage for our investors, our TheoTrade members, right? Back on January 3rd. Sorry, you used to work for TD Ameritrade. But the idea is that with our TheoTrade members in January, we saw tremendous activity being long gold and long silver. Lots of call option buying for when? December and January of this year and next year. And I kind of laid out a theme, the possibility the Fed's going to have to raise rates. We're going to see a crash. The Fed's going to have to lower rates all in the same year. And that's maybe what we're starting to see that we're inching towards as you look at forward/GQ, this transition towards significantly higher rates, aggressive raising of interest rates to all of a sudden being have to cut. And again, right now we're not pricing a rate cut by the end of the year. But we're not seeing the rate increases in July and then potentially in September creating the bite. So be really careful. Again, this is a big crossroads. Yes, there are companies, we're looking at Intel today, and a Professor Berman as well, is one of those situations where, yeah, you know what? I mean, there are companies that are trading at very nice valuations, and even if earnings dropped a bit, they'd still be trading at a compelling valuation. Right? And this creates this optimism. Hey, maybe this is the time to step in. Stocks like Zillow. Zillow's an entirely different company than Intel, right? That has very stable earnings, a long history in dividends. This is a growth stock, right? If it's growing, right? Now we're looking at Zillow. We're seeing it down tremendously, and we're seeing a little bit of silver lining here, right? We have the low, for example, down at 28. We have a higher low at 31. We're kind of confirming that over the last couple of days. You go to the trade tab here in Zillow, for example, and you have the July expiration here for next week out of the 35 strike. It's at the money. You see people kind of grasping at straws. Hey, yeah, maybe we do move back to 42.50 in the next week. Is that a possibility? Absolutely, it's a possibility. Is it a likelihood? Maybe it's a 50-50 shot of us even going higher a week from now. But there are those out there that are willing to take that bet, right, that we're going to move higher in the near term. But remember, as things start to turn, again, the bond market's reflecting a deflationary outlook, right, with an inverted yield curve, with yields coming down as the Fed is expected to maybe have a cut, start to cut maybe around 2.5% to 3%. That's why we're seeing strength in the bond market. Stronger dollar, we're attracting money because we have relatively high yields around the world. And so we have this little scenario that's providing a little bit of a window for some of these stocks to ease up as yields are coming in, oil prices are falling. But recognize, again, we're at a crossroads, but we're probably not going to move in the bulls direction by the end of the year. We'll probably have a very, very bumpy action here before the end of the year is done, which may cause the Fed to be on hold. So again, really look at that /ZQ. And again, as you consider this, you're saying, okay, we're raising rates. This is take 100 minus the price over. That's the Fed funds rate. Then all of a sudden, we're going to have to start to cut rates next year. Watch, this keeps getting pushed forward towards 2022. And all of a sudden, do they have to step in and do something before the end of the year because we have a disastrous fall? There's a very real possibility in that. And right now, oil prices, don't be fooled right now with oil prices dropping. This could very easily settle in $95, and we could see a very, very sharp reversal in the coming months. We're just kind of entering that summer driving season. We'll have to watch and see what supplies, what inventories do in the coming weeks. But right now, the term structure of the futures market with backwardation suggesting the risk is still the upside, even though we did a sizable pullback today. Let's look at some other stocks out here. So DBD. So Diebold, this is one that, again, it's been testing this area of support down here on 219. Notice there was a lot of volume today on a relatively neutral candle. It's a spinning top. There's kind of a tug of war going on today. And again, could it resolve itself to the upside? Absolutely. So again, this provides a very, kind of set area of risk. Upside here, maybe towards about 325 if we catch a bit. So you might look for it trading through today's high as maybe an indication. But this was an August expiration here, so this is not one that trades a lot of options. But notice 20,000 contracts at the $3 strike price, mostly bought today. So again, August, we're 45 days out. We're $3, which is up here. So again, providing a little bit of opportunity, saying, hey, maybe get a near-term push to 3, and we start to break 3. If that open interest, that volume carries over to open interest, it can create that gamma and starts to drive things even more, maybe towards 350. So this isn't a terrible reward to risk. Just recognize you might look for a trade through today's high, probably more of a stock trade than options trade, but then you got your clear line of support down there at today's low at around 212. This says, hey, you know what? I'm done. Okay, if it breaks it. Another one's Dollar General. These dollar stores were one that were really getting hammered because of shipping, right? The idea of moving product from store to store. I mean, Dollar Tree was getting slammed back here because of the negative guidance and this island reversal in here. Now we're breaking out today of Dollar Tree and Dollar General. And so all of a sudden, the shipping stuff may end up working out relatively positively, again, assuming that demand does not fall off, right? Now, these are consumer defensive stores because they're lower dollar, type stores. But again, Dollar General today. But again, you can look at the periphery here of Dollar Tree as well, breaking out on good volume. But just to show you the option activity in Dollar General today, again, it was the 8th July. So for this week, stepping in at around the 260 strike price. So you might trade Dollar Tree versus Dollar General. But again, this provides kind of an indication, hey, bullishness, 260, go figure. It's the prior high back here in the near term. As we look at Dollar Tree DLTR, again, is the possibility we test the high back here at 177. It's a very real possibility with today, the breakout, closing of the high on significant volume to boot. VTI, so let's look at VTI. And again, this is the Crossroads scenario, right? There are those out there saying, okay, this is a total market ETF, just kind of buying everything, right? Is the likelihood this is going to rise? But again, this is part of the crossroads. The bulls are there picking a direction. The bears are there choosing a direction. And for VTI, this is out in the Jan 23 expiration, and it's we got a 220 there. It's the 220 strike, right? Mostly bought. Again, longer amount of time before expiration. It's not going to move the delta as quickly. You don't have as much gamma in this, but it's just representative saying, hey, I think the market's going to be higher than 220 by the end of the year, going into January. So again, the bulls are out there taking their stabs. The shorts are nervous. They're covering right now. But again, is this immovable bullish force really immovable, or is the inertia really on the bearish side and the bulls are pushing against it? They're not going to be overcome, and we're going to see the bears roll here as the summer winds up as we move into fall. that's probably the likely scenario. So, but we do have this small window right now, as we talked about last week, for a little bit of upside in the market. Finally, wrap it up with X and USO. So US Steel, cyclical metal stock, right? Very, very oversold. But man, you look at the activity today. This was an August. Look at the August expiration out here. Couple of trades. We'll try to talk about one. One was the sorry, puts in here. Wrong side again. Looking at the put side of the equation, mostly bought at the 16 strike. Again, you've got it out to 15 there as well. You look at the July. So 15 was kind of a roll from the July expiration in here as well. So if we bring up the July, the 15, 17 getting rolled from here out to the August, getting rolled to the 15 strike. So again, we're getting a little bit of rolling action. We're extending the potential downside here. 15, 16s down here. Yes, this is, we say don't short into the hole. But if you're going to do it, you might do it from a long put vertical spread perspective. Granted, these were separate trades, but the volatility is favoring maybe a long put vertical, targeting 15, cost you about 30 something, for me close to 36 cents or something, 35 cents, for about 65 cents of upside if we test 15. Now again, we can look for the bounce and play it, but again, the bearish pressure is still on X, profit taking, but introducing new activity down to the 16 and 15 strike, expecting by August to see lower prices. Also in USO. Now again, this kind of goes against or is going against the activity or the backwardation, but is really in mode with today's sell-off. But even in USO as an example, I put on a position out there, just lottery ticket in case we rally going into September here, 90.95, cheap, but again, very, very unlikely it becomes profitable. But the idea is of what's happened today, for example, one was an October expiration down here at the 70 and 65, a long put vertical. And again, it's going out there to October. Is oil going to sell off in a bear market? Probably so. So we could easily see a spike in the near term, really pushing the market to the brink, and then we start to sell off. That's probably the most likely scenario. And this may be saying, hey, we think oil is going to collapse by the end of October if we see a September sell-off. Also in here, this was just a weekly expiration. Looking at kind of near-term downside here, pressure to the downside right now. I was like, just gain momentum as these options went in the money with today's sell-off. So again, we're just at a crossroads right now. And I think that in the end, we're going to find that we're going to resolve ourselves with a downside move that's going to really put the Fed on hold and may have to start to cut rates late this year, early next year. So the bond market's signaling, so strength in bonds, something I discussed last week in my session on Wednesday. Utilities got slammed today despite recent strength. This is even one that may come off quick if bond yields continue to fall as people buy bonds, prices go higher. We maintain that inverted yield curve. We may have near-term upside to like 75 in XLU. But again, right now we're poised to see a little bit of near-term strength. But again, we're in such a bearish climate right now is that there's a lot of inertia for the bulls to start to overcome to keep this ball rolling to the upside. And any little banana peel will cause them to stumble. And that's the precarious position we're finding ourselves in. So again, maybe you have some intraday opportunities. Maybe there's some swing trades that carry it to recent highs. But just be careful and look for the rally as an opportunity to reset. Again, to reiterate, VIX at 25, or more importantly, VIX at 20, skew starting to rise. This is a great scenario for you to reload if you're a bear out there. Anyway, folks, it's been a pleasure being with you today. We'll see you back next week on the video. Thank you.